What's going on? Welcome back to Trending Stocks. Today we're going to talk to you about SoFi. I want to give you an overview of what the hell happened, go over some of the data points and everything that you need to know. But first, make sure you guys hit that thumbs up, and with that, let's get right to it. So SoFi did close slightly in the red, 0.66%. It did have a lot of craziness. So it started off at 741 as the low. Then you had a very nice breakout to potentially, I think, 776 as the high. And then the market started to sell off a little bit. So I want to break it down on what caused this, and everything else. So there's a lot of uncertainty in the market. And I'm going to quickly play, I think it's like 50 seconds of this video because it kind of puts in perspective exactly what is influencing the market. So stay tuned.
All right, let's bring in BMO Wealth Management Chief Investment Officer 𝗖𝗢𝗡𝗡𝗖𝗧. Welcome. It's nice to have you on our program. You've heard what the ladies have had to say here about their views on this market. What's your own?
Yeah, thanks, Scott. It's great to be here. I think we're in a market now where we just have a very high degree of uncertainty, and it's going to be taken, the mixed data that we have is going to be taken in a glass half empty manner until the data starts turning more consistently positive. But it's very reasonable that we're in the last stage of a soft landing, that we get mixed data. But we have uncertainty about the Fed, we have uncertainty about the economy, we have uncertainty geopolitically and, of course, politically here regarding the elections. And that's just such a high degree of uncertainty when we're getting mixed data. And it's not really enough to generate momentum, we think, over the next couple of months. So we think we're in for a choppy couple of months, but we're pretty optimistic after that.
So yeah, there you have it. So even yesterday, for instance, manufacturing data didn't really come in line with expectations, showing more of a contraction. Just the market, like I think at this stage, just wants rate cuts. It just supposedly, I guess that's going to be the saving grace of the market. And it's kind of backwards. I've stated this in the past on how just the market is just so fixated on just rate cuts. Yeah, it's crazy. So even with today's data that did come out, wasn't really in line with expectations, once again really prompting some fear, and that did cause this to go up. So for the September 18th meeting, there now is a 45% likelihood of a 50 basis point cut. And plus a lot of institutions did kind of mimic the same thing. So I think Citi and Bank of America did say that yes, there will be most likely a 50 basis point cut for this meeting. And so a lot of growth stocks rallied based off of that news. But then again, with a lot of that inconsistent information, I think they're just raising this likelihood of a 50 basis point cut to combat a recession. And that's just my own opinion, of course. You guys do what you believe is justified for that. But yeah, I think just a lot of the market is crazy right now. There's no other way to put it. The fear and greed index right now is under the neutral category as well. So it's kind of pulling down. People's appetite for risk isn't necessarily there. You have shorts very active. So shorts did increase 1.09 million shares. 17.83% of the free float's being shorted. Works out to be 186.65 million shares. Majority of the volume today was truly linked with algorithmic trading, because even looking at the teal line right here, shorts consistently increased throughout the day, and so they didn't really cause much going on. All of here, you did have some large selling that was happening. So you did have one buy at 837. I was kind of going through all this line by line and matching it with this right here. So basically that one buy kickstarted here. You had a group of selling right here that caused this downtrend, such as right over here. So these groups right here. Again, you guys can always pause this, read through it, go line by line and match it with the chart. But it is interesting to see the level of selling. But despite that though, you did see it still run up higher, meaning algorithmic trading behind the scenes was really taking this out of context, in my opinion, and really driving a lot of growth stocks higher. And it's kind of across the board, right? So you saw pretty much all growth stocks rallying, and then you had institutions selling that news. So it's like a game of cat and mouse. So honestly, this market is absolutely crazy. And it's weird though, I guess, especially last meeting in July, like a lot of analysts were saying that the Fed should have really cut then. Just to put it in perspective, even today, Canada, which is where I do live, they cut for the third time today. And so, of course, I think that's exactly what the market likes. Canada, the TSX did rally a little bit today based off of that 25 basis point cut. So in total, they've done 75 basis points. But if you look at the September 18th and the November 7th, it's kind of projecting the same thing. If anything, maybe a full 100 basis points. So you do see more so a 50 basis point cut here, and then November, another 50 there. So who knows, that could be really what the market does need to jumpstart and really propel and get higher and out of this fear. But as what this analyst said, a lot of the data that's been coming out has just been it's not been overly bullish. So yeah, it's kind of crazy. It'd be nice to actually do a video without talking on, in some aspect, interest rates, because yeah, honestly, that's what is driving the market every single time. If you look at like almost any analyst ever talking, they refer to rates in one capacity or another. So it's, the market is just so fixated on interest rates, is crazy. But you have shorts just doing whatever the hell they are doing as well. So 17.83% of the free float. And so, yeah, I don't know. Shorts that are kind of stuck in limbo as far as a trend, they're most likely going to be waiting for the next couple of days. So you do have tomorrow, so initial jobless claims, ADP, non-farm employment, and then payroll on Friday. So a lot of consumer linked data. All of that is going to cause a whole new level of volatility, and most likely that will either solidify this 50 basis point cut for the September, really propelling it higher, or just diminish it. All depends on if it comes in positive or negative. Looking at options, and that's enough of me spieling about interest rates and all that, but looking at options, 3.27 million in calls, 844,000 in puts. So a good amount of volume in today. 46% of all the options being done so far today were optimistic and bullish, and of the call options, you do see a consensus for it to be around that $8 range. But like I've said, the closest strike price at the time, it's usually shorts hedging. So kind of just take that into consideration. But this is the current open interest. So right now with it pretty much close to that 750, there's 8,000 at that 750 in open interest, 40,000 at that 8, and then 39,000 at that 850. So I think it is fair to assume that this week is going to be a no-go for $8 unless something completely crazy does happen. So most likely it's just going to be a battle of the $7.50 range. And with there being 8,000, it's not that strong of a wall. So I wouldn't really anticipate shorts to kind of die and whatever just to bring it down below that 750 mark. So it's it's something to keep in mind, but you also do see at the same time a wall starting to be formed for next week at $8. So yeah, it's one of those repetitive loops time and time again. These are some of the transactions that did occur on the dark pool. So as I brought up in the video yesterday, a lot of reports are starting to come out saying that shorts are using the dark pool to really manipulate the broader market, and that's the dark pool was primarily the reason why the market has been going down. It's interesting. Dark pool definitely has some sketchiness to it. This is why it is often enough used by shorts as well as larger entities. And the whole purpose of the dark pool, why it was created, is to eliminate excessive volatility on the secondary market. Because if someone is going to buy $11 million, for instance, in stock, if they go to the secondary market, they're going to cause so much volatility. That's why the dark pool was created. And these are all the transactions that did occur on the dark pool, for instance, just today alone. So yeah, let me know your thoughts on that. Right now with it closing at 748, it is trading between these 2 points. So this pivot and this R1. So 743 is going to be that pivot point that you'll want to watch for it to hold support going into the next several trading days. Did momentarily break below that, but still it did hold. Aside from that, you do have that $8, well, I guess $7.50, $8, and then $8.31 as resistance levels. So that $7.50 and $8 are going to be brought on by the options. So again, stay tuned for that to see if it can break above. Today, it did actually break below that 200-day moving average, still in the higher percentile of the Bollinger Band. Stochastic, you do see it at 75. Bearish though, so red line above the white, and number of retail investors didn't really do that much. It was kind of flat today. So that's basically a summarization of everything that happened in this crazy messed up market that we call the stock market. So yeah, let me know your thoughts. Did you buy today? Did you sell? I didn't do anything. Again, like I said yesterday, when it was really spiking close to, I think, 780 or whatever it was at initially, I did sell some $8 calls on SoFi because, yeah, kind of learning from my mistakes on that, taking advantage of that. But yeah, I think at this stage in the game, I probably wouldn't buy SoFi just to, I want to ensure that it holds good support. And plus, as what that analyst did say, a lot of the data that's been coming out has been rather inconsistent. And I would like to see when, I believe it is next week, when a lot of big tech does unveil their earnings, I want to see that they are good. And because I think if tech at this stage in the game, if they start to show some signs of weakness, that might be that kind of X factor that causes the market to go down a little bit. But who knows? Let me know your thoughts. Don't forget to hit that thumbs up. And with all that, appreciate all of you watching.